We were just having a fascinating conversation backstage, initially talking about supply and demand and maybe looking at real estate through that lens. But before we get into that, I wanted to start where we were just leaving off, and that's asking the three of you who have expansive, diversified properties and portfolios, how you would characterize this point in time for the real estate industry. Jeff, maybe do you want to start?
First, thank you for having us here today. It's always exciting to be in Doha. You know, I think, as I said when we were backstage, when you think about real estate, people ask, well, how's the market? And I think it's very hard to answer that question. Real estate, our product is a byproduct of what's happening in the economy, what's happening in the world. So when you have disruption, when you have uncertainty, that creates difficulties in the real estate market. So, for example, if we're building office buildings and you have lots of uncertainty in the market, does the tenant, does the CEO want to sign a very large lease in times of uncertainty? So a stable market, more certainty is always good for real estate. And the other nemesis of real estate is high interest rates. So it's always difficult to build a capital-intensive asset when interest rates are high. So the real estate developers pray for low interest rates. So those are the two things that.
Is that your message to the?
That's our message. Pray for low interest rates.
Chee Koon, can you jump in here and talk about it from your region's perspective?
We, as a company, we started as a developer, but in the last few years, we have restructured to become more an asset manager. So that gives us a lot more flexibility. When you're a developer, you use a lot of your balance sheet to do investments to buy land. I think in an environment where business cycles are shorter, political environment, it's a lot more unpredictable. It does make it more challenging to be able to take on big development type projects, unless you're very disciplined in making sure that your entry price is right, you structure it right, and minimize the risks, and making sure that you can get all the leasing done, as much of the leasing done as possible to reduce your downside risk. In my view, this is a time where you don't see things quite clearly, but it does present interesting opportunities for certain high conviction strategies. So for us in particular, I mean, because it's uncertain, we look for strategies that are a lot higher returns, so special situations or private credit where the income stream is a lot more predictable, or in certain asset classes like in the data centers, because we believe in the digitalization sector. And of course, finally, it's on the living, because no matter how the world changes, how disruption takes place, you need a place to stay. When you travel, you need a place to stay to call it your home. So those are the few things that we continue to focus on, even in a world that I would say it's relatively more unstable and more unpredictable.
And Your Excellency, you say also the cultural aspect is important, because you need to ensure that the clientele is there.
Definitely. First, thank you for having us and hosting us in this panel. I truly believe, like you said, that culture and understanding the culture that you invest in is very important. There are some countries in the world that value an apartment over a villa, and there are other places in the world which actually enjoys compounds rather than separate villas. So understanding the location, the area.
I bet that was business.
Yeah. Seems like it. Understanding the location, the area, and where you're going to invest is very important. So you talked about supply and demand. And a lot of people look at it that, okay, we have too many offices or we have too many residentials. And the fact of the matter, it doesn't work that way. Quality does matter. Location does matter. So good quality offices now are actually in high demand. When you talked about villas in Qatar, they are in major demand in respect to apartments. So you need to really look at real estate as if you're going to purchase art. You really need to understand what you're purchasing and when you're going to purchase it. And I think we live in a very good opportunistic kind of timeline. We have a saying that, you know, real estate does go with the economy, but it will always have something that will pay you back. It's a way of hedging your currency. It's even when the interest rate is all-time high, people don't buy, but people do rent because they have to live somewhere. And that means the rental market picks up. We have seen trends where a lot of offices are not being built. But that means just 2 years from now, with the AI movement, if you may, the global movement of AI or energy transition, that means we will need more offices. Post-COVID, people are being told and asked to come back to the office. That means good quality offices, not old offices, but good quality new offices are actually in demand globally. So in the sense of it, you need to understand the culture, the place, and how you're going to work. However, real estate is always a very good place to invest in. We have a saying in Arabic, I'll say it in English, that real estate can get ill, but it will never die.
It'll never die, so it will sustain. Can you talk about, you mentioned paying back in the opportunity. We did just see the US president here in the region last week. Your company signed a deal with them. Talk about the value in that and what you're seeing long-term for that.
So Qatar Diar signed an agreement with Dar Al-Arkan, which is a Saudi-based company, developer. It's actually a sister, or let's say a friendly company that Qatar Diar have been working on for a long period of time. They're using the Trump brand for their golf courses. So there is a misconception there. This actual negotiation happened October of last year, so way before, you know, any political moves happen. And to be honest, one of the best golf brands is a Trump golf brand. And I think everyone would agree. So we were very happy about this partnership. We have launched, and the Prime Minister yesterday had talked about it, one of our biggest touristic destination project, which is Smeisma. The heart of Smeisma will be the Land of Legend, a huge theme park, and it will have the golf course, which will be a Trump golf course, and all the resources that will be on a 7 kilometers shoreline. Qatar, post the World Cup, have gained a big movement in infrastructure, as you see. We're actually, by the IMD, we are considered #1 globally in basic infrastructure. So we have built our infrastructure, and we can build on that success by building, tourism. And we have a very clear focus for Qatar. And I think, the Tourism Authority will be talking after this panel, but we have a very big focus on family tourism. So Smeisma will be a great project for that. As far as the visit goes, I mean, it's a historic visit. It's the first time an official state visit of the United States with the president came to Qatar. We were very proud of this visit, and I think it just highlights the great relationships that we have with the United States, and we will continue to have.
And you each have talked about some of the unpredictability that comes within the industry. But Jeff, I wonder if you can weigh in on whether or not there is an asset class within the real estate sector that is able to weather all sorts of volatility and maybe you've noticed outperform.
Right. So at Related Companies, we are one of the largest development firms in the United States and operate in London as well. And the answer is it changes over time, but some of the high conviction themes are also around multifamily today, homes, living, new office, and in particular, we've really spent a tremendous time responding to the digital infrastructure demand and building data centers throughout the United States. And so data centers have become a very unique opportunity because you're building the infrastructure to enable AI to happen with some of the best credits in the world as your tenants, signing long-term 15, 20-year leases. And so that's created a whole new opportunity, and the capital demands for the data centers are nothing like the real estate industry has ever seen.
What sort of numbers, if you can?
So for example, we're building now a 1 gigawatt data center. A 1 gigawatt data center could cost $11 to $12 billion. Yep. So you start doing 3, 4, 5 of them, starts to add up to a lot of money. And you know, if you think about even a big office building in New York City is 2 billion or 3 billion. So these are numbers that the real estate industry hasn't really dealt with in the past. But we think right now, data centers are one of the highest conviction opportunities because the demand is great and the supply of power is short. And while that supply-demand mismatch happens, you're going to have excess returns there. So we like that. We continue to develop multifamily. We are the developer of Hudson Yards in New York City, and so we're actually starting a brand new office building this month. We just signed a 800,000 square foot lease with Deloitte, the accounting firm. So it just proves that the demand for a new office is still very strong.
But we're still not seeing, at least New York, if we talk about New York, levels at where they were pre-pandemic. Does that worry you at all?
In terms of population, actually, the population has rebounded. People left during COVID and now come back. In terms of office, New York is almost fully back to office at least 4 days a week. You know, I think the world's decided that Friday is a national holiday. So if you get 4 days, that's back to the office. And so, but you're really seeing a bifurcation in the office market between the older B-class buildings and A, but in particular, brand new. The supply of brand new is low. This building we're starting at Hudson Yards will be the first new office start in 5 years in New York City. Wow. Think about here, you drive around, there's cranes on every corner. You know, New York City doesn't really have too many. But we're now we're seeing that demand again. I think you'll start to see a couple of new starts.
Chee Koon, do you double down as well, as Jeff was alluding to, on data centers and AI, really?
Yeah, I think, I don't believe that the trend on digitization or digitalization will change. And with AI, with DeepSeek, I think the demand for data is just going to continue to grow. The big challenge, at least in Asia, outside of the US, the big challenge is around whether there's going to have enough energy to be able to support the growth. It's not difficult to buy land to build data centers. The question is water, infrastructure, and power. And if you can get that going, and then the next big question is the capital. I mean, Jeff mentioned just now to build a 1 gigawatt of data center, it's going to cost 10 billion. So there's going to be massive amount of capital that's needed. I think that trend will continue to grow. There's a big question in many investors' mind today is because the AI sector, the technological sector moves so quickly. There are questions around, technological obsolescence, and what does it mean in terms of data centers that you have built, constructed, and maybe used by, whether it is co-location or hyperscaler, 3-5 years down the road, the technology, imagine that the technology has changed quite significantly. Then what do you do with data centers? With some of these data centers that may be outdated. So those are issues that, while the opportunity looks interesting, then how do you capture? How do you position yourself? How do you make sure that you build data centers that's fit for purpose for as long a period as possible?
How do you approach it then with caution? Is that sort of what you're alluding to? Yeah,
and location becomes important. I mean, there are, if you are building AI-enabled data centers, some of the users are quite prepared to choose remote locations. So you need to decide, whether you are prepared to invest in data centers that are remotely located. The issue is if the data center becomes obsolete, then what's going to happen to the alternative use of the asset? Whereas if you choose a data center that's closer to city center, even in the event that the technological obsolescence were to occur, then I think you have a chance to repurpose the data center into alternative uses. So these are issues that we have to think through. as we evaluate every single data center investment opportunities.
Your Excellency, do you want to jump in?
Yeah, I just want to add because I agree on everything said, but the capital is there. I mean, if we look at numbers, and I like sometimes to base my decisions on actual numbers that took place. In the first quarter of 2025, on cross-border investment between countries, there was an increase of 57%. So that shows that the capital is there. But you need to be selective in where the capital goes. Also, on transactions. We monitor transactions globally. And to be honest, in the first quarter, if you look at the Americas, they achieved only in the first quarter 93 billion USD, which is an increase of 37% from the first quarter of last year. On Europe, Middle East, and Africa, they actually sold 55 billion USD, which is a 41% increase of last year, 41% increase. And in Asia, they actually achieved 36 billion, which is, I think, 20% increase from the last year quarter. So, as I said, the appetite for real estate will always be there. The boom of AI is amazing, but yes, there is an opportunity, but there's a window, and the window needs to be captured. I always believe that the biggest place that can invest in AI is the Middle East, because we are already prepared. We have a very modern infrastructure. We have the cheapest energy in the world, and we have all the infrastructure ready for databases. But yes, being smart, I totally agreed. You need to be flexible, and you can diversify your real estate from offices to apartments, or from databases to energy transition, or to health centers. And it seems that every time we have a global talk, real estate investors talk about it. Like back in COVID, people were talking about health services and how it's very good to invest in health services. That was just 2 years ago. And now we're talking databases because of AI. Honestly, I think real estate globally is picking up. There are very good opportunities, but it is really picking up from what it was last year. Interest rates is coming down, and I believe they will continue to come down. We're very excited. We believe that the market will grow this year globally, but obviously some uncertainty, geopolitical tensions, trade policies will put pressure on it. However, if you don't invest now, then when will you?
Right. How do you think about this market here in Qatar? You're talking about energy being cheap in the Gulf compared to some of the other Gulf countries. I mean, if you think Doha versus Dubai, Dubai still has a competitive advantage over Doha. How do you think about it from the real estate lens? I see you shirking at that.
No, I'm smiling because you said competitive. I believe that the whole Gulf is one country. I mean, we build on each other. I have a lot of fans.
Clearly.
So we build in what we have. You don't build a theme park next to a theme park. We actually look at, and we have the Gulf Council, and we honestly build in. So what good stuff happening in Saudi Arabia, the big boom and the big investments, we're benefiting from them. One of our biggest tourists come from Saudi Arabia, and that is part of we're as a whole is one country. So Dubai, for me, is something that we're working very closely with. We're actually building on each other. A lot of the people come to Qatar through tourist services. They come to Qatar, then they go to Dubai, then they go to Saudi Arabia. We represent one place. You know, in the World Cup, people don't recognize Qataris from people from the UAE, from Saudi Arabia. So they know us as Middle Eastern, you know what I mean? So in a way, I think as far as real estate, Qatar, touch wood, but we're the safest country in the world as per capita. We have the best schools. We believe that we want to build on that. We want a place where your lifestyle will be different, where you can see your children going to schools without the need to go through security. For us, this is what you see. You've been to Qatar, you've been through our cities, our new cities, our smart cities, and you know what we have to deliver.
Thanks for that. Jeff, before we wrap up, I wanted to ask you all about potentially what the trajectory for the real estate sector looks like in the next few years. I know we're still taking it day by day, considering a lot of the uncertainty, but what would you say is the risk to some of this growth and some of this capital that you all have put into the properties and the projects that you're working on?
Again, I think the environment, political uncertainty is always a distraction, interest rates, but I think with this administration, we're seeing a much more the beginning of stabilization to occur now.
The U.S., you mean?
Yes, in the U.S. And so I think businesses are starting to get their footing a little bit, and so I think we'll enter into a period of calm. And I think that's why you're seeing companies make decisions like the big office lease that we just signed, like the data centers that are getting built. We own Equinox Fitness Clubs, and we have a Equinox hotel concept that we launched at Hudson Yards. And now we're bringing that to the region, and so we're building 4 Equinox hotels in Saudi Arabia, 1 in Abu Dhabi, 1 in Dubai, and in the green room, I think maybe we made a deal for Doha.
Wow,
so,
do we want to break that news right now?
No, it will have its own announcement.
So I think there's a lot of opportunity to expand here in the region as well.
Chee Koon?
Yeah, I mean, for CapitaLand, I mean, we have been operating in India, China, a lot of Asia in the last 30 over years. I've been traveling to the GCC quite often. Happy to say that we are starting to look at opportunities, whether it's business parks, industrial logistics, and potentially data centers. And why are we doing this is because we have very, very deep relationship with many of the companies in China, in India, in Asia, really looking to invest in the Middle East. And it gives us great confidence to be able to look at some of these land opportunities, because we are quite sure that there will be takeout from a tenant's perspective. And as a result, it's really not difficult to be able to raise capital, and will make it quite interesting for us. And even though I always thought that Singapore is quite well planned and quite well designed as a city, but coming to the region and see how well Doha has built up, I think there are I want to encourage the Singapore government to learn from the Qatari government as well.
What sort of things are you looking at?
In terms of city planning, the use of energy, sustainability, making the environment conducive. Every real estate becomes usable for the tenants. I think it's a very well thought through in terms from the beginning to the end. And I just want to congratulate the Qatari government for excellent achievements.
Your Excellency, before I go to you, Jeff, do you think some of these models, though, can be replicated in the U.S., or maybe is the U.S. a different model than what we're seeing here in the Gulf?
In terms of the master plan?
Yeah.
I mean, the problem, the U.S. is much more built out than here. So what's great about the region and here in Doha is you have the opportunity to take all the knowledge that happened over decades in the rest of the world and start from scratch. I mean, you would never create the infrastructure underneath New York City if you were starting from scratch. Here, you have the opportunity to take all those learnings and really do something incredible and modern. So each city has its benefits, but that's one of the benefit of kind of creating a city later, right, is all the learnings from the past.
Yeah. Your Excellency, is that some of the learnings that you and the team have looked to? I mean, what sort of markets are you trying to replicate when you look to build up?
Definitely. I mean, our Qatar Vision 2030 was built on learning from others. We started late when it comes to the infrastructure game. And that's why I'm saying we have the best infrastructure in the world, because we learned from everyone else. Who do you think, who were the consultants that built or designed our infrastructure? They're from the US. We have people from Singapore. We have people from the UK. So everything was put into that. And that's why I'm saying, if there is anything, our infrastructure is the most ready infrastructure to utilize AI, because we have all the data. AI cannot work without having the data to actually access. All our cities were built and the data is available. So we have modern infrastructure. In the 60s and the 50s, we didn't have any infrastructure, and obviously other countries in the world. And that's why I believe that the Gulf as a whole has a unique opportunity to actually lead in smart cities and actual use of AI in our urban planning.